Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I go any further, let me go through the disclosures. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And as an introduction, this presentation and my channel and Bookmap Discord is very focused, and the focus is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first step is planning, and I use positional analysis. Other traders may use technical analysis or fundamental analysis. And I use positional analysis, and that is looking at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding volatility and expected trading range for the day, and also a directional bias. And the second step in my process is execution. And I look at real-time order flow in Bookmap and market maker hedging flow in Spotgamma Hero to help confirm my thesis and for trade setups. And questions and comments are welcome. On topic, questions and comments, again, questions and comments focused on what I'm saying, what I'm presenting, or these topics. Okay, that's the introduction, and now let's get started. First, some quick news items. Of course, the big events this week were the CPI report that came out on Tuesday, then the FOMC announcement and press conference yesterday, and apparently the market has interpreted what Fed Chair Powell said as more hawkish than expected. I think he was indicating that more rate hikes are needed than the market expected. And so the market sold off yesterday and continues that today. And this morning there was one other piece of economic data released, and that was the U.S. retail sales that came in worse than expected. So just adding a little fuel to the fire. And the last thing to note is tomorrow is the large monthly, quarterly options expiration. It's the December 16th options expiration, and it's a significant event for options. And we can look for, typically after a large monthly expiration, look for potential shifts in levels after that. So today, what I want to talk about, I'm going to go through, first of all, my positional analysis, and I'm going to look at an S&P 500 overview, and then I want to talk about setups that I saw this morning, and I want to also take a deep dive on a setup that I saw yesterday. Not in time. It was a Moderna, a stock that's not on my watch list that I normally don't look at, but it was it's been in the news, and I want to take a closer look at that setup for educational purposes. And then we will look at setups today. There are some great setups. I posted my Spotgamma Hero watch list this morning in Bookmap Discord chat, and it was ranked from the weakest hero signal to the strongest, and that the top stocks on that list all provided great short setups, and we'll go over those. So first of all, so now let's start with the positional analysis for the S&P 500. And so we'll take a look at the ES futures. And here I'm showing levels that are from Spotgamma. So in this column here, this SG column, these are Spotgamma cloud notes. And I'm showing what these are showing. What's visible here is the SPX levels 3950 and 3900 adjusted for the equivalent SPX ES price. So right now Spotgamma is using a price difference of 25 points between SPX and ES. And then this column, this C levels column, that's my column, and I'm showing the support and resistance levels that Spotgamma provided in the AEM Founders Note. So both the 3950 and the 3900 SPX levels were indicated as support today, and there was some, looks like some stalling and chop around the 3950 level for a while, and the same with the 3900 level, but price has ES has continued lower. So those are the support and resistance levels that were that have been in play today. And as far as shifts and levels go, there was an increase in the volatility trigger for SPX, SPY, and QQQ. And the volatility trigger is Spotgamma's proprietary gamma flip level. And above the volatility trigger, market makers are typically in a positive gamma. They're on the positive gamma part of the gamma curve, and that means they have to sell futures as price rises and buy futures as price decreases to hedge their delta exposure. So in a positive gamma environment, market makers are trading against price, and that tends to reduce volatility. And that's not the case today. Both, all of those instruments, SPX, SPY, and QQQ, are trading well below their volatility triggers, meaning that now those instruments and market makers are in a negative gamma environment. And in that case, market makers have to sell futures as price decreases and buy futures as price increases to hedge their delta exposure. So they will be trading with price in a negative gamma environment, and that tends to increase volatility. And one other thing, the SPX put wall actually moved up to 4,000, and that's just because of the dominance of the 4,000 level, SPX 4,000. And we'll look at the SPX gamma levels in just a minute, and we can see that. And then also the SPY call wall dropped down from 410 to 405. Okay, let's take a look at some data now. Here was a note that regarding the put wall that I wanted to point out, and this is in the Spotgamma AM Founders Note, and just regarding that change in the put wall, 4,000 is so large that it has now become the put wall, and also noting that all these options will expire tomorrow morning. That's the AM settlement for SPX. Okay, so let's look at the data now. And as you know, I always focus on gamma notional. That's one of the, for me, in my mind, that's one of the most important pieces of data here. And this is what I'm talking about. So market makers, this is market makers' position, and they are in the negative portion of the gamma curve. And gamma notional for SPX, this is for yesterday afternoon, and I compare the gamma notional number from morning to morning. So yesterday morning, SPX gamma notional was positive 106, and it has shifted to minus 152 today. And SPY gamma notional was minus 101 yesterday, and today it's minus 571. So gamma notional has shifted back to negative for SPX and has shifted more negative for SPY. And with the sell-off today, I anticipate that both of these numbers will shift further into the negative part of the gamma curve. And again, that means that market makers have to sell futures as price decreases, and that tends to increase volatility. And let's take a look now at the gamma levels. Go back to SPX, and this is just showing that the 4,000 strike is still the clearly the dominant strike, as it has been for quite some time. I'm going to zoom in on SPY a bit. This is the 400 strike, and it's still the dominant strike, but there are more substantial put positions below that level, and those are shown by these teal lines below the zero level. So that just goes along with the larger negative gamma notional for SPY, indicating more substantial put positions down below. And finally, let's take a look at the Vanna charts. And this is just a quick visual reference that indicates what I'm talking about. So this is what this is showing is how market makers delta notional changes with changes in price, implied volatility, and time. So the green curve shows how gamma notional shifts with changes in price and also implied volatility, and that's the Vanna effect. And the way to interpret this is to draw a line through here that makes sense based on the curve. And this is indicating again that market makers' delta exposure will increase as price falls, and that means they have to sell futures as price drops, and they can buy back the futures as price increases. And let's just take a look and see how that has shifted over time. So this is information based on the market close yesterday. This is the day before, more of a neutral Vanna model. So we can see over the last couple of days that gamma notional has shifted towards a more negative gamma, and the same with SPY. Okay, are there any questions about that? So what I'm looking for is, again, traders are buying puts today, and we'll take a look at that in Spotgamma Hero, and they're buying SPX and SPY puts, and I expect this gamma notional to become more negative for both SPX and SPY tomorrow. And one potential thing to look for is all of these puts, and they're buying puts that expire today and tomorrow, and those puts will be gone on Monday. And what has happened quite often this year in a negative gamma environment, again, traders are long puts, market makers are selling the puts, and they have to sell futures to hedge their delta exposure. When all those puts expire on Monday, they can buy back their short futures. They don't need them anymore since those puts are gone. And that has been a pretty typical scenario this year in a negative gamma environment. So just one thing to keep in mind, one thing to look for. Okay, I want to now, let me just check for questions on YouTube. And there's a question about the C levels in Bookmap, and I use an add-on that's available in the Bookmap marketplace called Price Lines. And I fill out all the levels that I want in a spreadsheet, and then Price Lines uses the Cloud Notes feature in Bookmap to display the levels in that column and also draw the lines that are shown on my chart. So I use that for futures and for stocks, and we'll see that in my charts. And there's a question also on YouTube. Aren't market makers always negative gamma? They have been for most of this year, but there have been times where market makers' position has shifted to positive gamma, and that's for the S&P 500 and other indices. For stocks, the Spotgamma model is different. For stocks, Spotgamma assumes that traders are long puts, long calls, or long calls. Market makers are short calls and or short puts. So they're always in a negative gamma environment for single stocks like Apple or Nvidia. But for the S&P 500, their gamma position can be negative or positive. Okay, let's take a look at this setup from yesterday that I want to talk about. And this is Moderna. So again, Moderna has been on the news. There was an announcement about a cancer vaccine that apparently this news was interpreted as bullish, whatever it was. I think that was on Monday. So anyway, this is from yesterday. This is from 12/14, and I'm going to do a review of this setup. So this is from 12/14, and what I'm showing here is my Spotgamma, or this is actually all of the stocks available in Spotgamma Hero. and they're right now 190 stocks. And you can also, and what I do is I have my own watch list that I normally watch in Spotgamma, but this is one that I thought was interesting, and it shows another potential use of this. So anyway, Moderna's been in the news. It's been interpreted as positive, and what this is showing is Moderna is at the top of the list of all these symbols ranked by hero signal. So I clicked on hero signal here, and it ranks them from either strongest to weakest or weakest to strongest. If I clicked it again, it would be from weakest to strongest. And what this is showing is a hero signal in the 30-day range, which is the entire range here. And also you can see on this GLD below, this colored section shows the range for the last 5 days. So Moderna is showing that the hero signal for yesterday was the strongest that it has been in the last 5 days and last 30 days. So that's a starting point. Now normally I would approach my watch list a little bit differently. But anyway, this is, since Moderna is not on my watch list, I took a little bit different approach here. So first of all, I wanted to see what was going on with all these stocks. I see Moderna at the top of the list. I recall that it's been in the news. So then I open up Spotgamma Hero, the chart for Moderna, and see that traders are taking positive delta positions. So they're selling puts and buying calls. And this shows that they are, again, the blue line shows that they are selling puts, and the orange line shows they're buying puts. And the orange line is also showing around 10:15, traders start buying puts more aggressively, and price starts to rise again after chopping around in this range for a while. So seeing this, and I'm showing this Spotgamma chart up until about just from the open all the way to a little bit after 12 p.m. Eastern time. But you could have opened it at any time and seen Spotgamma Hero up to that point. So just to confirm what I'm seeing and do a little bit further investigation, the next thing that I can do is go to Moderna in the Spotgamma Equity Hub, and I can see that the key gamma strike increased from 170 the prior day to 200 today. So that's a bullish signal. And also the put wall jumped up substantially from 155 to 190. And that's also very, very bullish. So, a couple of bullish confirmations there. And the next thing, I check this composite view chart in Equity Hub and see that this is the price from the prior day, and showing that it is near the top of this chart, showing the Spotgamma momentum indicator. And this is indicating a high rate of change of gamma at this level, and you can equate that with volatility. So Moderna is near the peak of this chart, which shows the highest rate of volatility. And also this is showing that at the 200 level, gamma will shift from put dominated to call dominated. That's this reddish orange color below 200, and the green color above 200 indicates that shift. And the next thing, this chart, the put call impact chart, also shows that large call dominance above that 200 level. So just a lot of the same information here, just a different format. And then finally, this is the skew chart. And what this is showing is implied volatility on the vertical axis and delta on the horizontal axis. And this delta 50 is the at the money strike. And what this chart is showing is implied volatility for calls above this level, or actually, that would be delta less than 50. So that's calls to the right of this line and puts to the left of this line. So this is indicating that there is a high demand for calls, and the dashed lines are showing implied volatility for the current. Actually, this would be the previous day, since this data is generated at the close every day. And then I'm looking at this on the 14th, and this is showing data for the 13th and the 12th. So the dashed lines are showing the current or next expiration, which would be the Friday expiration. That's the 12/16 expiration. And then the solid lines are showing the expiration approximately 30 days out. So what this is indicating is that there is you can equate implied volatility with demand. So there is a higher than normal demand for calls when you see this skew lifting up to the right, indicating a higher demand for calls. Now, you would never really see this in SPY or SPX. There's always a higher demand for puts than calls. So this is another bullish signal. So let's take a look at Bookmap and see how that played out. And it was a huge rally in Moderna. Traders are buying calls, market makers are selling the calls, and they have to buy stock to hedge their delta exposure. And that is a very powerful force that can drive a stock much higher. As the stock continues to increase in price, market makers have to continue to buy stock to hedge their delta exposure, and that can that can again fuel a powerful rally, create a feedback loop. And here, remember I noted that Moderna chopped around a level until traders started buying calls again. So this was a good breakout setup here. Okay, I just wanted to highlight this setup, and then here's how the day played out. So it rallied up to about 217, and then you can see as the options traders start to take profits, then price levels off for the rest of the day. All right, let's take a look at some setups for today. So this is the watch list that I posted today for those who are not in Bookmap Discord chat. So this morning I ranked my watch list from the weakest signal to the strongest signal. So unlike the list that I showed before, this is just my watch list. So it does not include all the 190 symbols. It only includes the stocks that are on my watch list. So now let's go through this list and one thing that I want to show before I go into this any further is my spreadsheet. And this is something that I keep every day, and I track the key gamma strike for all the stocks in my watch list. So this shows the key gamma strike for these stocks for the previous day and for the current day. So when I start in the morning, I just shift this lever, this column over to the right, and then I color code these, the key gamma strike for these stocks with red if that key gamma strike dropped, and green if it increased. So that's just another starting point. So I look at that's part of my preparation, and then I look at this Spotgamma Hero watch list as soon as the market opens. All right, so let's start with the, well, first of all, notice, so the first stock on the list was Google. So again, that watch list is in Bookmap Discord, and I post that every morning. So notice the first stock on the list is Google, and it also, the key gamma strike dropped from 100 to 95. And that's, the levels in Google really don't shift around that much. So that's kind of significant. All right, so let's go take a look at Google now. And we'll just go down this list and look at setups. So here's Google. Look at the total signal. And there was a very strong correlation this morning between price action and an options trade shown by Hero here. And especially puts. Traders were buying puts, and that's been pretty common today, is traders are buying a lot of puts. So that's shown by the blue line here. Blue line falling indicates that traders are buying puts. All right, let's go to Bookmap now. Let's go over to Google. And let me check for questions. And let's see, there's a question about Spotgamma does require a subscription. Yes. And I'm using, I have a Spotgamma Alpha subscription. And another question about Spotgamma, go to spotgamma.com. That's where this comes from. So I use Bookmap and Spotgamma to develop a thesis and to plan and execute trades during the day. So here's the first one on the list, Google. And again, remember, traders are buying puts, and this is a nice short setup. I drew these triangles this morning, or the rectangles this morning, and they may be a little bit hard to see now, but it looks like the first entry that I saw here was this break of the 93 level. And notice the 92 put wall was the first target, and then there are a couple of liquidity targets shown here below in Bookmap at 91, and then at 90 the key delta strike. So that would be, that would be the target for this afternoon, is the 90 key delta strike and all that liquidity at that level. And that would actually be the primary target for the day. All right, that was Google. And the next one on the list is SPX. And there's a very strong correlation between price action and hero and options trades today. And like I said, traders are buying puts. Now this is showing all expirations, and let's just take a look at what they're doing with the next expiration, which would be today. So this is showing a pretty substantial amount of the puts that traders are buying are in puts that expire today, the 0 DTE puts. And that's shown by this darker, I don't know, bluish, purplish line here. So this lighter blue line is the total of puts that they're buying, and this darker line is the total of the puts, the 0 DTE puts. So there are any number of ways to trade that. You could buy an SPX put. You could have bought one this morning, or if that's too much, too big, you could buy SPY puts, sell SPY shares, sell ES futures. And this is what I did this morning, is I just worked my way down this list. Normally Google does not move enough. I like to keep it in my watch list because I track the large cap tech stocks, but it typically does not move enough to be of much interest. So QQQ was really my first stopping point here, looking at it more closely for a trade. And this morning there was a strong correlation between price action and hero. I'm going to zoom in on that. Yeah, I've sent a support ticket to Spotgamma about that change in zoom level. So anyway, just as we've seen, traders are buying puts in QQQ. That's shown by the blue line here. All right, let's take a look at Bookmap now. Go to QQQ. So like I said, this was my first close look this morning. And I'm going to zoom in on the morning session a bit here. So here was the first entry point, this break of this trend line here, and then a retest of the 281 level. And then another entry point was a break of this, 280 40 level. And you can see all the pink dots coming in there. and that's also the put wall. So that was a break of the put wall. And price has continued lower. And it looks like the primary target is the 275 level and all the high liquidity there. Let me check for questions again. And there are quite a few questions in YouTube. So Alex asked, can I apply this methodology if I trade ES? Yes, definitely. I think a large number of Bookmap users and Spotgamma users trade ES. I primarily trade stocks, but ES is certainly again, a lot of traders using Bookmap and Spotgamma trade ES. Well, there's another question. ES is not covered in Spotgamma, but yes, the underlyings that are driving ES are SPX and SPY. So what Spotgamma is showing is options trades in SPX and SPY are driving price action in ES, and that's because market makers. That's the only way. ES is the only way to hedge options trades in SPX. You can't buy or sell SPX, and it's the most efficient way to trade or to hedge options trades in SPY. So the underlyings that Spotgamma is using for ES are SPX and SPY. Well, there's a question about CME futures options instead of SPY options. Yeah, you can certainly trade ES options if you want. Yeah, less margin, but that's like the equivalent of 500 shares of SPY. And a question about the mini ES. Yeah, you could trade that. The only, I guess, the only circumstance where I would trade the mini ES is if my account was very small and I wanted to avoid the pattern day trading rules. So what's the mini of ES? The mini ES is the equivalent to 500 shares, and the micro is 1/10 of that. I prefer to trade SPY. Right, the mini is ES and the micro is MES. Okay. Let's go back. The next one on the list was Netflix. It looks like I need to add more price levels below 290 here in my spreadsheet. And let's go take a look at Netflix here in Spotgamma Hero. And just like most other stocks, traders were buying puts today. And that's shown by the blue line. And when traders buy puts, market makers sell the puts, and they have to sell stock to hedge their delta exposure. And just like when traders are buying calls and price rises, as price continues to decrease, market makers have to continue to buy stock, to sell stock to hedge their delta exposure. And I want to take a look at one other thing that could potentially be driving price here. I'm going to go to Equity Hub and look at Netflix. And first of all, point out that %38 of gamma expires today, and a little bit smaller amount of delta expires tomorrow. I'm sorry, tomorrow expiration. So 38% gamma expires, and almost 29% of delta expires tomorrow. And let's take a look now. Let's go down here. And I'm going to look at the composite view chart. So this shows that, and this is more pronounced than some other stocks that we'll look at in just a minute, call domination, call gamma domination above 335 and put domination below. So there are some long calls out there. And again, this is more pronounced in other stocks that I'll look at in just a minute. And I need to speed it up. So anyway, all these calls are expiring tomorrow, or a lot of them are. We saw that the amount of gamma expiring, and so this could mean that traders were long in this case out of the money calls. Those calls are expiring, and market makers that had bought stock to hedge their delta exposure can be selling to as those calls quickly lose value as price drops. And the next one on the list is block. I've got that on another computer. Give me a moment to share my screen, and we'll take a look at that. Okay, so just clear, nice downtrend and block. And let's go take a look at Hero now. So I'm just working my way down the list. And again, puts are driving, traders are buying puts. Market makers are selling puts and selling stock to hedge their delta exposure. And let's take a look at Equity Hub again. This time we'll go to block. And here there's more pronounced call gamma above the 72 level. And one other thing to point out is this is another stock with a falling key gamma strike. 75 to 72. So just another checkbox on the bearish side there. Another check on the bearish list. Let's go back to Equity Hub. And here is the falling key gamma strike. So in this case, again, similar to Netflix, but more call domination above that 72 level. And again, market makers, the traders were long out of the money calls. Those calls are quickly losing value. And here we can see that and this is pretty typical of a higher beta stock like block, is traders are actively trading the next expiration. So we can see here the next gamma expiration, 43.5% gamma expiring tomorrow, and 72.5% of delta expiring tomorrow. So all those calls, as price drops, all those calls are quickly losing value, and that just adds more fuel to the fire as market makers who were long stock to hedge their delta exposure can sell their stock as those calls lose value and price drops. So it's kind of a two punches here to the negative side. Is the traders are buying puts, and also all these calls are quickly losing value. And let's look at one other. I'm going to drop down to, well, we'll just take a quick look at Apple. That's the next one on the list. And here traders are both selling calls and buying puts. Let's take a look at Bookmap. And yes, Paul, I will take a look at the Tesla. That's the last one that I want to look at. And I posted a setup in Tesla this morning. So Apple, another strong downtrend here today, with 135 as the primary liquidity target. Well, 138 was the first target, and price chopped around that level for a while before now heading down to 135. Let's take a look at NVIDIA. And for those of you in Bookmap Discord, Jay detailed a trade that he took this morning in NVIDIA based on what he saw in Spotgamma and also in Bookmap and the liquidity there. So nice strong downtrend this morning. Note all the pink dots in here until finally about noon. Some aggressive traders start coming in. So let's take a look at Spotgamma Hero for NVIDIA. And again, traders were buying puts this morning. Not doing much with calls, and that was driving price lower. And let's take a quick look in Equity Hub. And NVIDIA has been pretty strong recently. And note the call gamma dominates above 185, and we can see that in this chart as well. So again, traders were long calls, out of the money calls. Those calls are quickly losing value, and that could be adding fuel to the fire. All right, the next one, the last one that I want to look at is Tesla. And actually, let's just go to Spotgamma here. Notice it was not on this, not on the top of this list. It was actually on the other side of the list with a strong signal this morning. But what I saw and what I posted, let me just open up what I posted here. Was this divergence right here. So my thinking was Tesla has been weak for some time. It's rising today, but everything else, the broad market is falling. You know, Tesla is likely to reverse and continue lower. And I saw this divergence, and it made for a good short scalp in Tesla. Zoom back out. Now let's go look at Bookmap. So strong rally in this morning. If you wanted to play that, that was certainly supported by options traders, and then the divergence reversal lower. I'm going to zoom in on that level for a short scalp. Break of the trend line, retest of the 160 level, and then short for 2 or 3 points. All right, let me check for questions. And Paul, you're welcome. Far beyond the moon. You can use the equity hubs levels however you want. I use them for day trading. They can certainly be used for swing trading as well. Either way you want to play it. And let's just take a quick look at SPY. It looks like I need to add more levels to my spreadsheet below. And let's take a look at Spotgamma Hero. So when you separate out puts and calls for SPY, price action becomes very clear. Traders are buying puts, just like they were in SPX. And while I'm showing this, let me check for questions in YouTube. For Rower, you're very welcome. Thank you for your questions and comments. Yeah, both Bookmap and Spotgamma are essential tools. So that is, my time is up. And I appreciate your questions and comments. And tomorrow again is the monthly expiration and it'll be interesting to see how the markets react. And again, keep in mind that the expectation is that the S&P 500, SPX, and SPY, with the sharp drop this morning, will market makers' position on the gamma curve will be much more negative, and that could potentially lead to a rally on on Monday. That has been typical this year, as those puts expire and market makers can buy back their short hedges. So we'll keep an eye out for that. And again, thanks for attending. Thanks for your questions and comments. And I will see you tomorrow on Expiration Friday. Thanks again. Bye.